Hey everybody, Marty Mazur. Good afternoon. 13th of April 2016. I'm going to try to be quick. I apologize. I tend to ramble. I'm going to try to keep myself on track. So I'm going to be looking at my daily log and kind of paraphrasing as I go. That'll make me more succinct. So stocks this morning, we rallied hard right out of the gate. I can tell you it had a lot to do with China. Good trade numbers overnight. Huge rally in Asia bled through, particularly to our commodity stocks today. JP Morgan showed very good numbers relative to expectations. That certainly helped the banks. Commodities, because of that exposure that I've talked about for several months now, that's going to help the banking sector as well. So great day for banks, great day for commodity stocks. Not so good for staples, utilities, telecom. The more defensive sectors got sold today as money rotated into the more high beta names, or let's just say the more growthy sectors. So it was a good day for the market. It was a good day in terms of what the market says about the economy, even the global economy, in the face of a lot of negative commentary there. And I will offer up more economic stuff, certainly, if not before the weekend, on the weekend blog. It's about time to dig a little deeper on the economy. So retail numbers disappointed this morning. However, the breadth was pretty good. And when I say breadth, I mean sector by sector. We actually had a better look than we've seen in quite some time in terms of the number of sectors that actually had month-over-month increases. Auto sales were down. It was the year-over-year numbers that weren't so great. But there's always some base effect when it comes to these numbers. So I was not bothered by the retail numbers. Clearly, the market wasn't. I would suggest, though, that anything that suggests of a balancing out, you get some relatively good news out of China, which has been a concern for everybody, including the Fed. You get some relatively soft news out of the U.S., and you sum it all up, and maybe you say, yeah, the Fed's going to be on hold for quite some time, and the market could go higher against, when you look at it in the aggregate, valuation that's getting kind of rich. There are pockets. Financials look very cheap to me. Transports look cheap enough. There's a handful of sectors that look very attractive, but in the aggregate, the S&P is trading at about 17 plus times this year's estimated earnings, and that's a little high. But in a low interest rate environment with a Fed that's not threatening, stocks can definitely melt higher in that kind of an environment. And that's what we're seeing. And let's go ahead and jump to the charts, because I've been talking about the technicals, and let me just see. I didn't realize how busy I had this. Let me just clean this up. Oh, a little bit. I'm going to get those moving averages off there for now, and we'll come back to those at some point, probably not today. But I don't know if that helps at all. But let's take a look at this blue line here. This was a very definite downtrend line. In fact, this was that channel I threw up there, I think, yesterday. That's the top end of that channel. Very, very important. And as you can see here, it had been resistance for several days. The market just couldn't penetrate it. Well, it barely did yesterday, and it did in a big way today, again, on China and on JP Morgan News. So that's a big deal. If we can come down off of that maybe a little bit, but bounce and hold that as support, that's going to really set the stage for a spring higher into these higher levels. And there's more support for that. I think any objective technician would have to say, yeah, these were some bearish signals, but if we could break above these and hold there and gain a little momentum, then suddenly you can see more money flow into this market, and we start testing that all-time high. I've been saying that it would make sense to me that we test some level lower before we get there. We're not there yet, but boy, we're within a stone's throw. And I said there's enough short interest that would have to be covered, and enough disbelievers who might start believing that you could see this become something, particularly if we get a lot more JP Morgans over the next few weeks, and if the outlooks from the multinationals are good because the dollar's weaker and they think it's going to remain weaker, then you've got the makings for a pretty good rally. And we don't have much to worry about until we get close to late June with the Great Britain referendum that I've been talking about. Folks, I don't know that it plays out that way. The market is a bit overbought here. It would make sense to me. What I've been saying the last few days is expect big moves. If you want to say triple digit moves in the Dow, that would make sense to me, in both directions, up and down, when you look at the current setup. Notice I have these little things I've been doing here. This red line, this is on balance volume. This is supposed to tell us really what's been more meaningful from a volume standpoint, the up days or down days. Now, typically you need more up volume to really sustain a good rally. And this is telling us that we really haven't been getting it. That's moving sideways while the market has been moving up. So that's one of those red flags I have been talking about. The MACD, the moving average convergence divergence, when the red line is above the MACD line or the signal line, or when this one breaks down below, that's a sell signal, but you can see it's begun to turn up because we've had a couple of good days. That's still flashing a sell signal, but the trend is moving in the right direction. That moves above that, and that's something that could bring technicians, chart watchers into the market as well. The relative strength index is getting close to that overbought territory. I know if I ran a shorter chart, we would be there. So there's certainly some downside short-term risk, but the breadth continues to be good. That, as I've said for weeks, is a good intermediate term indicator. Some of these technical signals have been flashing sell to me for a very short term, which isn't you and me, by the way, but for people who are. However, the Fed has kind of come to the market's rescue. China helped out, and now earnings, at least for a couple of days, are helping out as well. So it'll be interesting to see. Let me just touch on one more thing. I was looking at volume, and I thought I might share this with you. This is, and I showed you a chart kind of like this recently. This was what was troubling me, or one of the big things. This was the trend, the volume trend, while the market was going up. That is absolutely something that says this is a very weak rally. And that's why I was telling you folks, I'm having a tough time committing to it. Notice that when the market was falling, see that huge surge in up volume? That's what basically suggested that had more to run, even when it began to bounce there. And you can see it finally bottomed here, you know, gosh, a full month later than this bottom here, when everybody no doubt got excited. Reasons to be pessimistic in the short term. This has been a reason, but this is very, very short term. But look at the last couple of days. Up days on up volume. That's kind of what you want to see. There's not enough there for me to draw a new trend line, not by a long shot, but for somebody who is looking for reasons to say the glass is half full, we're getting a few confirmations now that we weren't getting just a few days ago. So this is going to be interesting to watch, folks. This is me coming to you just in case you are paying attention to it and listening to the news. I want to give you some maybe deeper perspective on what moves markets in the near term, and then always remind you that this is not going to have an impact on the long-term decisions we make. This is just keeping you from thinking too much or worrying about the craziness that is the market in an earnings season, when we have an election year and we have some pending international events or decisions to be made that could move markets and currencies. So enough for today. Thank you, as always, for watching and listening, folks, and I'll be back very soon. Bye-bye.